We are pleased to see that the growth we had in the second half delivered a solid set of results. We see that across each of our pillars. We talk about our digital businesses, our unified commerce customers, as you referenced, who also have an in-store part of their business. And on the platform side, we also see it across regions, where in North America, we saw our strongest net revenue growth at 27% this year. So we see growth from a wide range of parts of our business, and I think we're pleased with that.
Hiring has been a huge focus for the market because you were hiring when others weren't. As we take a look ahead, it seems that's going to slow down now. And you also call out the EBITDA margin, 48%, reflecting that you intentionally slowed hiring pace. Have you got all the talent you need at this point?
We feel we've really built a strong team to execute on the opportunity that we have in the upcoming years. We, of course, did it at a time when others weren't. And we feel we're really well positioned given that hiring. It was always intended to be a 2-year accelerated investment cycle, which we've wrapped up at the end of 23. So while we'll still make strategic investments in the team in the years ahead, it will be at a much lower rate than we did the last 2 years.
Ethan, what do volumes look like from here? Because we've seen the consumer spend up first on products, then they've been spending up on services. But the year ahead, it feels as though consumers may tighten their belt further from here. So how does it impact volumes?
Yeah, so the growth of our customer base does have an impact on our volume growth, but the biggest part actually comes from gaining what we call wallet share with our customers, so doing more of their payments as time goes on. And that's really fundamental to how we've built our business. It's really about a land and expand strategy where you start with a customer maybe doing a specific region or a specific brand of theirs or a specific sales channel. And from there, you expand. So it is true that the macro environment will impact our growth because it impacts our customers' growth. But a bigger piece of our growth comes from expanding that wallet share, and that we feel we plan to continue in the coming years.
Ethan, really nice to get a view on the B2B side of things from you as well. But I'm actually just interested in your stock price a little bit as well. You probably own shed loads yourself. It is the most stunningly volatile stock out, well, not the most, but it is pretty volatile. I mean, it's a hell of a ride that investors are going on with you as well. How do you smooth out that ride for investors?
Yeah, so you're right that we are very much focused on building the business, but we're also very focused on engaging with our investors. And we've increased our engagement over the last 6 months. We collected a lot of feedback from them in the last 6 months. We listened carefully, and we have implemented some of the changes that come from that. So we held an investor day last November in San Francisco, where we shared more insights into how we expect the business to develop in the upcoming years. We plan to share quarterly updates on how the business is progressing throughout 24 at least, and in order to make sure that we can increase visibility and give more insights in how the business develops going forward. But it's absolutely something we're focused on in terms of investor engagement.
Yeah, I mean, that's fabulous, actually, because clearly the August episode was absolutely bruising. So you've gone away, you've thought about it, you need to engage more, you need to give them more information as well. How's that panning out with the kind of roster of investors? Are you finding people are hanging around for a bit longer?
I think the engagement has been really helpful to us. We did collect a lot of feedback throughout that period. And of course, we are building a business for the long term. So many of the changes we implement in our business are very much long-term oriented. They don't shift growth from one quarter to the next. So while we wanted to maintain that long-term focus, and we still absolutely do inside the business, we also feel like we could make some modifications to give more updates along the way to investors to understand how our business develops as we go. And those are some of the changes that we implemented. It has been positively received from investors, and it's in large part due to their feedback. So we're grateful for that.
Yeah, sorry, I'm really just pursuing this line. Karen will get back to the business in a moment. What was their biggest criticism? I mean, I'm sure they said lots of nice things as well, but what was the biggest thing they said? Come on, guys, sort this out.
Yeah, I think the thing that they were asking for was more insights in how the business was developing along the way. And that's what we tried to accomplish at the Investor Day in November by giving a few more metrics and being clear about our strategy going forward and why we're so confident in the growth trajectory of Adyen. That's what we shared, but we also committed to giving more regular updates. In the past, we gave half-yearly updates. We'll still do that. We still very much have a focus on the longer term, so that half-yearly makes sense. But we also want to give progress updates into how those halves are developing, and that's why we'll also give updates in Q1 and Q3, which we haven't done in the past. So those are a few of the things they were asking for, and some of the things we also find helpful in being able to deliver going forward.
Ethan, I want to pick up on a couple of industry trends with you. A couple of years back, you try and make a purchase online, and often you just give up. You get to the basket, and it was really impossible to transact. You hit every firewall possible, and it was just really hard to make a payment. This time around, now in 2024, it feels like you can execute a transaction in less than 60 seconds, possibly even quicker than that, and it's not on a platform called Amazon. So how is the industry changing, and is there still any low-hanging fruit left when it comes to friction and payments?
Yeah, absolutely. So